In this video, I'm going to show you guys one of the best smart money concept strategies that I've been using and executing in the live markets here. So let's jump straight in. This is XAU USD, also known as gold, on the 4-hour time frame. And these sort of grey and black sort of dots here, these are an indication of a fractal. Okay, and what fractals allow us to do is to identify market structure from a very mechanical perspective. Okay, so there's no sort of gray area between, is this a break of structure? Is this a lower high, etc. These fractals give us that very objective approach when it comes to identifying market structure. Okay, so we have a fractal low down here. And let's play price on a little bit here. So this is the 4-hour time frame. This is our higher time frame perspective, okay? And we're using this for our directional bias in order to identify the higher time frame institutional flow, okay? Where the institutions are looking at taking price, okay? So you can see here we have violated structure to the downside. You can see we've broke this fractal here. And we've had a body close below, okay? So we can mark this on as a break of structure to the downside here. Let's zoom in here. So clearly the institutional bias is to the downside. We are breaking fractal lows. We have a body close below, and then we also have some continuation. So price is, able to maintain below these lower valuations there. Okay, so now that we've identified a strong break to the downside, we can go ahead and mark on number 2, which is our fair value and our discounted area. Okay, so in short, we only want to be selling from discount. Okay, so discount is simply when price is above 50% of that mitigation from the break. So we mark that on from the fractal high down to the new low there. I'm just going to take off this break of structure just for simplicity. But as you guys know, we've broke this structure here to the downside. We've maintained below. We now have a lower high in the market, which is confirmed by this fractal high here. And we've also made a new low in the market. So we can go ahead and mark on our discounted regime. This would be from the high of that fractal down to the low here. So we're waiting, so if and only if price comes back into discount, so somewhere in discount, we can look for a short trade and then look for some continuation to the downside there. Okay, so that's the setup based on the 4-hour time frame. Now this is where it gets interesting. So we're going to drop down to the 15-minute time frame, and this is where we're going to be looking for our entry schematic. Okay. Another very important concept to note here is we are only going to be executing trades between half, so 7:30 up until 10:30 a.m. UK time, and also from, let's play this out, so you've got 7:30 up until around 10 a.m. up until maybe 10:30 a.m. I would personally prefer to be executing between 7:30 and 10 a.m. because this is the London session kill zone. Okay, this is the London session kill zone. So let's play this on a little bit. Let's see if price can come back into discount. So what we see here, as I said, kill zones is between 7:30 UK time up until 10 a.m. Okay, GMT UK. And then our London session kill zone is between 1:30 UK time up until 3:30. Okay, so we're only looking at executing trades in these sessions, the London and New York session. We're not bothered about any price action in between. We don't care about what's happened in Asia too much, or at least we're not looking for entries in Asia, the Asian session. We're only interested in the time within these kill zones. So if and only if price is between these kill zones, then we can look at executing a trade. The reason behind this is because that is when the most volume is going to come into the markets. Okay, That's when the most volume is there, and that's therefore where we're going to expect, based on past data, where the most volatility will be there in the market. So, i.e., a higher probability for us executing a trade here. Okay, so let's jump into a entry here. So clearly we are in discount. You can see this is the 4-hour swing. So what we were looking at on the 4-hour before, this was the fractal high, and we've marked that on down to the low. So now that price is within this discounted area, the discounted regime, we can look for an entry as long as it's within our kill zone sessions. Okay, the entry schematic is based on a liquidity run of, so if we're looking for shorts, it's going to be based on a liquidity run to the upside. So let's delve in and look at exactly what that is. So this is gold here, 15-minute time frame, and what can we see here? So we had these sort of double top area in the back end of the London session. Okay, so we can mark this on as a run on liquidity. Okay, so this is a high here. This is sort of an equal high, double top. It's a fractal high. The main thing is that you use the most recent fractal high. So you in theory, you would use this fractal high here, okay? It's sort of a double top. So whether you use this fractal here or that fractal there, they're pretty much the same valuation in price, okay? But the most important concept is that you're using the most recent fractal high on the 15-minute time frame, okay? Clearly what we've done here is we've run that liquidity to the upside. Okay, so mark that on as the top there. We've broke that liquidity. We've ran all of them stop losses for all of the retail traders that are trying to get short on this market too early. All of their stop losses are going to be up within this region, and clearly the most recent price has just ran all of the retail stop losses out of this market. Okay, so we've had a strong run on liquidity here. You can see we're making higher highs. So let's zoom in. Let's make this very clear for you guys. So we've run the liquidity, okay? We price on the 15-minute candles are making higher highs and higher lows. So higher high there, higher high there. Let's move up here. You can see we've made a higher high on this candle, a higher high on this candle, higher high on this candle, and then ultimately we've made another higher high on that candle there. Okay, so now that we had another higher high in the market, so we're just trailing up, because if you imagine these higher highs, this is the 15-minute time frame. However, when you drop to the lower time frame, these higher highs and higher lows on the lower time frame are going to look like this in terms of market structure, higher highs and higher lows. However, we're just looking at the 15-minute time frame to get a more simplistic approach. We don't need to drop down even lower because we can see on the 15-minute time frame that, you know, these lows are being respected, these highs are being respected, so we know without even dropping down to the lower time frames that this is bullish market structure. Okay, so that's our entry schematic there. We can understand the market structure behind that, and we have another higher high in the market followed by a strong rejection. Okay, so once we've seen this, on a break of that low here, you can see that the low is pretty close from where we're going to break, but pretty much as we break this low, we can enter a limit order on the break there, and we can have a stop loss above that high there. Okay, so the entry limit order would be, so once we've seen the close of this 15-minute candle, it's going to be about half a pip below there, okay, with a stop loss a couple pips above. Okay, so let's give that, you know, a little bit of breathing room there, okay, and we're going to enter a limit order as we break the low of this 15-minute candle, okay, because that is a anticipation, that is an indication, sorry, to us that, you know, this market is now shifting to bearish market structure. So therefore, the 15-minute time frame will be lining up with our higher time frame bias. Don't forget, on the 4-hour time frame, if we zoom out here, you know, we've identified this is a 4-hour bearish market structure. Therefore, you know, we should be looking at shifting this to the downside. Okay, so let's play price on. Target is going to be a 1 to 3. Okay, 1 to 3 on these entries. always. Okay, let's play this on. So you can see we're triggered in the trade as we break the low there. Stop loss is intact, and we're looking for this trade to play out there. Playing price on. You can see here, so we're still in this trade. We're still in this trade, okay? And so we're riding this trade. With this strategy, there's no mechanical management, so we're not moving stops to break even. Either we win the trade or we lose the trade, okay? Another thing to note here is we're still in discount. So you can see here, let's extend this across here. Extend this across. So we've gone into another London session here, and what's happened here is that we've ran this most recent fractal to the upside. So just sort of understand that, okay, we're already in this position here, we're riding that trade, okay? And what we understand now, we're in a London session, we've had a run on liquidity to the upside here of this most recent fractal high there. We're in the London session between 7:30 and 10 a.m. Okay, so let's play this back a tiny bit here. So we've run that liquidity, okay, we have a higher high, followed by a higher high, followed by another higher high, okay? So based on our entry schematic, we can enter a short position on the break of the low of that higher high candle there. Stop loss goes just above, and we're going to be looking at targeting a 1 to 3 trade. Okay, you can see this one, the stop loss is a little bit tighter, therefore the range, the probability of this trade playing out is maybe a little bit higher. Okay, because we don't have to capture as much of that move in order to make, a very successful trade. So let's play this on. So we've run that liquidity to the upside, higher high, higher high, higher high, based on price there. So the most recent lower high on the lower time frame would be here. Okay? Sorry, it wouldn't be there. It would be here. So once we've made that new higher high. So we're going to be entering on a break there of that low, and we're going to be targeting a 1 to 3 risk to reward. So let's allow this trade to play out. Okay, and so stop loss is intact. You can see we were nearly stopped out. However, we gave the trade a little bit of room to breathe. Okay, a little bit of room to breathe. And we also, we're not emotional. We're just allowing that trade to play out. It either stops us out or we hit a 1 to 3. Another thing to note here is within this entry schematic, there was actually another entry. Okay, because you can see we go into the New York session here, and you can see we actually ran this fractal high here. We ran that fractal high, and then we shifted and broke the low of the most recent candle, which made the higher high. Okay, so there was actually another entry. I'm not really going to mark this on, I'm going to delete this in a moment, but just for sort of example purposes, there was actually another entry here with our entry schematic, because you can see we ran that liquidity there, we made a higher high in the market, and then we ran them stops there. We can enter on the break of that candle, target a 1 to 3, okay? But just for simplicity's sake, I'm not going to mark that on. Okay? So you can see we're triggered in them 2 trades. The second one smash take profit within the New York session, and the other trade is currently still running here, and let's see if that ultimately plays out here. Okay, so we're still sort of chopping around a bit, and ultimately that first position that we did take, that was ultimately hit for a 1 to 3 as well there. Okay, so within this 4-hour market structure, you can see there was multiple entries based on the 15-minute time frame. Okay, so yeah, that's pretty much this strategy in a nutshell. Okay, so 4-hour, we have a regime. We identify market structure on the 4-hour time frame. It's bearish. Okay, we then drop to the 15-minute time frame. Within the discounted area, we can look for our entry schematic. So in short, we're looking for a run on liquidity based on the most recent fractal, within a kill zone. Okay, within a kill zone, so within a London session or New York session. Okay, we're then entering based off that entry schematic, and then looking at targeting a 1 to 3 as long as there's enough room for price, as long as there's a 1 to 3 before we get down to these equal lows here. Okay, so that's it for this video. Okay, I just wanted to touch on this strategy, in great detail here. But yeah, guys, let me know your thoughts below. Let me know. Please like, comment, and subscribe, and I will see you guys in the next video. Okay, take care, guys. Bye-bye.